All right, story number 4. And this is where things start to get very interesting. Because while sentiment is sitting in fear, institutions are still buying. Let's start with strategy, formerly MicroStrategy, led by Michael Saylor. And yes, still doing exactly what you think they're doing. Buying more Bitcoin. They recently added another chunk, bringing total holdings to roughly 767,000 BTC. Let that sink in. That's not trading. That's not, we'll see how this plays out. That's a full-on conviction strategy. And it's not just them. You've also got continued ETF inflows, corporate treasuries holding, and institutions steadily accumulating in the background. All while price is basically going sideways. Now, why does this matter? Because every time Bitcoin dips, there's a buyer. And that's how floors get built. Not with hype, not with retail FOMO, but with consistent accumulation. Now add one more layer to this. We've already crossed over 20 million Bitcoin mined, so the remaining supply, getting tighter, which means every time institutions buy, they're not just adding exposure, they're removing supply from circulation. And that's the scarcity narrative everyone talks about, actually playing out in real time. Now, does that mean price goes straight up? Of course not, because in the short term, macro still matters, liquidity still matters, and sentiment still matters. But long term, this kind of accumulation is what builds the foundation for bigger moves. So, where does this go from here? If institutional buying continues, you're likely looking at a stronger price floor under Bitcoin. But if price drops too far or funding conditions tighten, there's always the risk that pace slows down. So, bottom line, retail might be uncertain, but institutions, they're still positioning. And when those two eventually line up, that's when markets tend to move the fastest.